Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite important structure level. In fact, this zone was acting as previous monthly resistance. The market has now broken above the area, so this previous resistance is now turned support. And as the market is testing previous resistance turned support, we could expect bullish price action to be developed away from this area. We can also notice that if we look at the actual pattern that the market has created here, we can notice how we have a very strong impulse to the upside, followed by this correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we had a perfect correction exactly to the 50% of the Fibonacci taken on the monthly impulse, which creates very strong demand and support, which we could in fact expect this market to test and then to reject to the upside. So on the monthly, everything looks very bullish. Dropping down on the weekly time frame, what do we have? From a weekly perspective, if we look at the movements of this market, we can see how this area was clearly acting as resistance. We then had the break above the zone. This previous resistance became support. The market rejected it to the upside. Currently, we're getting a retest of this level from which we could expect the market to potentially push to the upside, also potentially breaking above this high, essentially completing that monthly impulse correction and impulse pattern to the upside. So monthly and weekly, at the moment, both seem quite bullish. Going down in the daily time frame, what do we have? Now, from a daily perspective, what we can notice is that we had this massive impulse to the downside. Now, at the moment, in a situation like this, it is quite clear how this market seems overextended to the downside from a daily perspective, from which a move to the upside seems quite likely, even only for the creation of a correction. Then we could have a potential double bottom before we get a move higher. But a correction after an impulse like this definitely seems very likely. In fact, since we have this impulse, as we did before by looking at the monthly time frame and the weekly, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg, and we can see how we have a 0.32 Fibonacci retracement at the moment, lining up exactly this area. This would be the first upside target in a case of a correction. And you also have to keep in mind that the pattern that the market has been creating in making this move to the downside is in overextended M pattern. And in general, after the creation of an overextended M pattern, what we would like to see is for the market to create a move to the upside to go and correct at least to the 0.32 of the Fibonacci taken on the impulse leg, which in this case is exactly this zone, which is the completion zone of the pattern itself. So at the moment, everything is pointing for this market to create a deeper correction up to this level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the JPY. So what institutions are doing on the JPY, the first thing that we have to keep in mind is that by checking the data for the JPY, we're actually checking JPY USD, because all currencies on the spot are traded against the USD. So by looking at the data for the JPY already, we're looking at JPY USD. And since we want to be looking at USD JPY, we simply have to reverse everything. So what we can see here by looking at the net positions is that institutions went from having minus 61K net positions all the way down to having minus 117K net positions. This shows how clearly institutions have been moving to the bearish side of the JPY, making the JPY weaker. And in fact, this makes USD JPY stronger and is the reason for which, if we zoom out, clearly this market has been in an uptrend, because a weakening JPY makes USD JPY stronger. So institutions have been longing USD JPY. Now this increases the probabilities that since we had this massive move to the downside, institutions could once again start longing USD JPY, therefore further increasing the probabilities of a potential move to the upside and the completion of this overextended M pattern from a daily perspective, creating the correction that we want to see to this level. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to go and retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, you can get a full refund of the mentorship program price after you join the program if you open an account with them directly in your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description. At least you're supposed to go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.